So these are a couple down, basically reversal patterns within the downtrend I want you to focus on. Now we play a lot of these, right? We know the double bottom pattern. We know the cup and handle pattern, right? We know the accumulation, inverted head and shoulders, all of this basically. All right, but I kind of want to reiterate what this actually looks like on a chart. All right. And the one I'm going to use for tonight is going to be the round bottom pattern. And I say that because I don't know if you paid attention, right? Maybe some of those who've been in the market for a while understand the majority of these stocks, especially the S&P stocks, they move the same way. Okay, they move the same way. Some might even lag, but will still continue in the same pattern as the other stocks. That being said, basically each and every one of these reversal patterns has had a play in the market. You might not have noticed it, but I've noticed it, right? There was a time when we would play the inverted head and shoulders, right? All these stocks on the daily time frame that were showing inverted head and shoulders, right, which is this one, right? Those were the stocks to hop into because those are the ones taking off. Then we started seeing a lot of double bottom patterns, okay? We started seeing these double bottom patterns. Those stocks, once they broke that neckline, they started taking off, right? Then we saw a lot of accumulation, and there's still naturally going to be accumulation patterns like this, right? You're still going to see this throughout your time in the market. But something that I've been seeing a lot of are the round bottom patterns coming into play on the way these stocks are moving, how they're falling. And as they accumulate, a zone where you can kind of buy more stocks because others are buying stocks there and curling up, right, to where they could before they take off. That's the round bottom pattern. I've been seeing that a lot, and that's also one of the ways I made that NVIDIA call, right? And I'm about to show you right now. So the round bottom pattern, NVIDIA on the daily, right? If you look here, you have this downtrend. Hold on, let it load. I marked this chart up a lot, so you might see a bunch of lines on it. So there you go. All right. I'll put these back when I'm done. I already know where they're at. So basically focus on this one right here. As you saw on the daily time frame, right? One of the key things is we're going to use the daily, right, to determine the overall trend of the stock because that gives you a more spread out, right, outlook on where the stock is going. Because every one of these candles equals a whole day's worth of movement. So this gives you a lot of data and creates the patterns that you're looking for to basically go off of. But if we go right here, right, it came down and started making that turn up, right? Even tried it again, came up. So this is actually giving you that double bottom too, but that is also rounding up back to the other side. Okay. So that being said, even more so, if we're looking at it from a double bottom perspective, right, where it comes down, creates that first level of support, tries to come back up to break the previous resistance, and comes back down to that same level of support before trying to come back up again. And what do you look for in a double bottom is to break that support or that resistance, right? When you break that resistance level, which in the case of a double bottom is called the neckline, right? When you break that, that's where you enter for a breakout to the upside. So you don't got to do any fancy smancy drawings, right? Once you identify this pattern, right, you have a couple of things to take note of. One, this same support got hit again. So this is a solid support level and a good zone to watch. Obviously, below this zone, it'll probably drop a lot more. But as it comes down to the zone off of this first area, we know that it bounced back up. So we know that if it comes to this zone again and starts to bounce back up some more, we can then buy here because we know that this is a strong support zone. And from this zone, it tends to come back up to this resistance that we drew out. Okay. So all this data lets us know how to play now. So boom, came down, goes up. Let's say we're here. Oh, it touched that support again and is holding. I'll buy some more because this previous same level was a strong support level, so it'll probably hold again. I'll buy some more. Now, for those of us who know about stop losses, right, you got to set your stop loss to be safe. Ideally, below that support zone is where your stop loss is. But from that support on up, it's called your accumulation zone. If you want to get in early, you accumulate and buy here and wait for it to finally break out. Now, if you want to be even safer and just play momentum movements, right? Volume breakouts, don't touch it. let it break out because we know all we're looking for is this resistance line to get broken above, right, by one candle. Once this breakout happens and the candle closes above that line, right, ideally you can get in there or the next candle. As long as the next candle is green and stays above that line, that is your confirmation to continue to get into the play and watch that continuation to the upside. Okay. So this characteristics of this play that you're going to notice in all other reversal plays is you will have a support level or support zone, right? Levels aren't always perfect. It'll be a zone because kind of in that area, give or take a few pennies is where that support level is, right? Next, you have a mapped out resistance. That resistance was hit multiple times. That's how you know it's a strong resistance in the level you're looking to mark off as your breakout level. Why? Because the stock, right, broke all the way down, right, came down. It even next day it came down as low as there and then tried to go back up. Once it went back up, it got pushed down and closed down here. That means this is a resistance level to watch because it broke below this level, tried it again, and got rejected. Boom, easy resistance map out. Not only did it come up and try to hit it again, once it hit it, it rejected right back down to support. This is definitely confirmed as our strong resistance level to watch. So you'll set your line right here, right along this level. You've already set your support here. As you see it hit that support, stayed strong. So now we know we're set up on a double bottom play and looking for a breakout. What did it do? It broke out and ran all the way up to 212. Remember, after we took some profits in the twos, I said 215 is the next target. Hell, I think it was the next day, it went for that 212 level. So almost got to 215 the next day, but there's still room. Okay, now, just to reiterate some things, EMAs are important too, right? When you got levels like the 50 EMA or the 200 EMA, right, and the stock's coming down and like sitting on it and staying above it though, that's the level to watch. Remember, the 50 and the 200 are mental levels that other traders are watching, not just us, right? We don't just trade stocks, right? We trade psychology, we trade patterns. And the psychology is if you can get a strong close above this 50 EMA, there's a strong chance that it can move up from there. That'll be your bounce zone. Okay. Same with the 200. The stock falls all the way down to the 200 EMA, right? And lands on it and starts to create a reversal pattern right above that 200 EMA, that signs that that 200 EMA is probably a bounce zone. So that being said, right, see this 10 EMA? We're always watching this throughout all our plays. If NVIDIA drops below 201, there's a strong chance it can come back to 194 and test out that 10 EMA, right? Test out if that level is still strong before taking off again. All right, but those are just things to pay attention to. But right now, let's focus on finding out when to get in, right? Plays in a downtrend. Best bet when you start seeing reversal patterns, okay? Start making, taking small positions. You never want to go 100% of your position, right? Maybe 25% or 50%, just in case it comes down some more and you could add some more. Or if you're in here and it breaks out, you can add more in the breakout and multiply your gains to the upside. Another thing I want to come let me see, hold on. Also, I will post this, which it's already posted in the traders library, right? But I'll post this again just to make sure you guys know what you need to be studying and looking at. Okay. But this pattern and this pattern, you're going to see a lot of these patterns, right? Cup and handle, all it is, right, is that curl pattern, but it got rejected one more time before taking off again. It looks like a cup with a handle. All right. One more thing I want you guys to do, right? If you guys aren't sure about trades, right? If you still feel shaky, or if you want to find a way to practice and trade in real time, make sure you start paper trading, right? Start paper trading. That way, you can practice in real time with the real stock movement and see how your skills are, but you're not going to lose real money while practicing. All right, you don't always got to learn the hard way and trade with real money. There is a way on all platforms, right? Robinhood and Webull to paper trade. You could always go on YouTube and find a video of how to set up paper trading on Robinhood and how to set up paper trading on the Webull app as well. Now, US economic calendar is glitching. So we're going to go down to next week, which is actually next week. But yeah. Okay. I just want you to know right now, this week is about to get busy. Okay. It's about to get busy. This is not a week to take big chances. This is not a week to be a cowboy. This is a week to test your resolve and how strongly you stick to your plan. Okay. This is about sticking to your plan. This isn't like a trade on Monday, trade your plan, then be cautious. No, this is a be cautious all week, right? Understand government shutdown has held off a lot of economic data, right? This is private economic data that we've been getting, and the government shutdown has been, because of that, kind of holding back some of the numbers and things like that. This is one of those times where you're about to get a flood of economic data, right, and a bunch of numbers, and then people are going to start feeling some kind of way about it. And you know how that works. We get the data we don't like or the numbers we don't want to see, the market tends to come down, okay? Or there tends to be a lot of volatility, or there tends to be a lot of choppiness. So, if you ask me, no day is going to be a straight trading day. If you find a solid trade, if anything, let that be your only trade for the day and be happy with the gains you got. If you find yourself getting chopped out of trades, remember you failed two trades, three trades tops, turn the computer off. All right, turn the computer off. Go back to journaling, write down your notes, and remember what happened that day so you know exactly why you took that L. And you could take note of what happened that day. So if it happens again, you know exactly what not to do. Now, just for our awareness, S&P final US manufacturing PMI, that is important data, right? That's big data. Fed speeches, they're 50-50. Sometimes people don't care about them, sometimes people do. But yeah, that 9:45 a.m. data is going to come out and it could mess up your whole situation. All right. So if anything, if you want to get a solid trend or a solid look, right, I would wait until that data comes out. You got the 10 a.m. data, right? But again, I don't see this being too crazy of an issue, but this is one everybody's watching. Tuesday, Fed chair at 6:35 a.m. Don't worry about that. US trade deficit is important, right? And job openings. We already have a sour taste in our mouth about the job economy, right? About the jobs in the economy. So I'm not saying the negative information that's most likely going to come out is priced in, right? But we're already feeling this. So that being said, your US trade deficit is going to come out at 8:30 a.m. What does that mean? And for those of you who've been here before, you know we're already going to see the market sentiment to that data come 9:30. So you already know what direction to take your trade or to be cautious of. Okay. Job openings, again, it is important data at 10 a.m. So if you want to be even safer, when the market opens at 9:30, you can sit back for 30 minutes and see what happens at 10 a.m., then start taking trades. All right. Not to mention, right, the 15-minute ORB strategy, the 30-minute ORB strategy, the 1 hour ORB strategy, those things take time anyway. You want to let the candles start to form. Wednesday, ADP employment, S&P final US service, PMI, ISM services. So again, that's another one that could get a little shaky in that first 15 minutes. So if anything, just kick back until 10 a.m. and then determine what direction you want to take. Unless you're quick, right? Remember, scalp trading is the thing. Scalping, right? That trade, you're not even day trading. You're not even in there for a 10-minute, 20-minute, 30-minute trade that day, an hour trade that day. It could be a few seconds or a few minutes, right? You could be playing just that first candle as it booms up. Get in, get your money, get out. All right. But again, this whole week could be choppy. This whole week could be shaky. There's a lot of data coming out because on top of this economic data, we also have earnings coming out. Okay, but Thursday we have a lot of data, a lot of Fed governors, initial job claims, all of this. Thursday, y'all might want to treat it like a Friday and just chill. Friday, you probably won't even see me in the chat on Friday unless I'm talking shit. So again, Friday, I'm always chilling on Friday. Y'all know this. I might put out a couple plays now lately, but I'm probably gonna just continue my trend of not even being around on Fridays. But Thursday, I would treat Thursday like a Friday and watch it closely, be cautious, and if you don't see a trade, don't take it. Perfect setups only, right? That is the key. You don't have to take three trades a day. You don't have to take three different stocks a day. Perfect setups only, right? Some of you trade SPY. and you bank big on SPY, then want to go trade Nvidia, Palantir, or one of these stocks that get called out, and then lose a little bit of that. Don't trade what you know. Okay. Yeah, I make calls. Junior makes calls, right? Other calls come out, but you don't got to take them, right? You don't got to take every call. This is also a learning channel, right? Use these Sundays to build your plan, right? Go back to the books in the library in the courses. Review these Sunday lives because they get posted right in the Sunday live channel. You can go back and review these lives. You don't always got to take a trade. You can also refine your skills and learn how to just say no sometimes. All right. In the way with this economic uncertainty, this shutdown, and the way things are going on, it's okay to say no sometimes. That's how you actually save your money and make more money. But yeah, this week's going to be busy. Be cautious every day of the trading day. Perfect trades only. And honestly, it's okay to say no. All right, let's see. Fear and greed meter. Where are we? 35. All right, 35 is where we're at. Again, fear doesn't mean actually fear the stock. That just lets us know the stock is coming down. The majority of these emotional retail traders, they're selling stocks, they're getting scared, they're feeling some kind of way, right? You also have the big pockets, market makers, and institutions playing tricks with you, selling stocks right along with you, hitting stop losses, right? Pushing you out of your trades, only to go ahead and buy up once it hits that extreme fear and start buying up some more stocks right below your nose, right up under your nose, right? That's why I tell you, if you can take strong companies, profitable companies, and time-tested companies on these pullbacks and market fall downs. Those ones will be the ones that always find a way back up. All right. And always remember, you do have the VIX as well, right? You do have the VIX. You can revert back to the traders chat for VIX levels. Let's get into this earnings week. Look at this. Look at this. This is crazy. I don't even know where I want to start. But I'm gonna tell you right now, Fubo, right? Earnings. That's something that some of us are in. Palantir has earnings. I'll be watching that. Hims and Hers has earnings. Navitas has earnings. All right. Now pay attention to something, right? I keep telling you when you're researching these stocks, pay attention to financials. Pay attention to financials. You can go to yahoo.com and take these notes, write these down. You can go to yahoo.com, type in the ticker, click on the financials button, which sometimes is in the top or the left side menu box. Hit financials, and it'll tell you everything you need to know. If you don't know how to read a financial sheet, one of the things you do need to read is revenue. And that's the very first number that comes up is the revenue. And if that company is constantly making more and more revenue every year, right? The revenue's going up big every year, going up. That company is one that could possibly do good during earnings. Okay. If that company is known to basically continuously get, come up in revenue, that's not a bad company to look at when it comes to earnings. Even companies that are negative, but that negative number is slowly getting better every year and it's on its way to being positive. Those are also growth stocks you want to look at, right? So where maybe that next quarter or that next year, they might actually be in positive revenue earnings then. Okay, just a little hint on how to kind of peep out stocks worth possibly trading into earnings. Now, I don't ever suggest trading earnings, right? But we also do know that the volume kicks up on these stocks and earnings, right? As to where, let's say, Palantir normally trades 2 million, I'm just throwing out a fake number, 2 million in volume, right? Leading up to earnings and during earnings, you can see that volume double, triple, quadruple. And what does that volume do? It gives us bigger moves when we do trade. That's why I bring these up, not for you to trade earnings, right? But for you to trade volume. So where if you want to get in on these plays before they report earnings, right, throughout the week, that up and down movement, they tend to be a little bit bigger, a little more exaggerated, right? Or you might catch it just run up into the market, right? Those are the moves we like to trade. So these are the stocks that we watch during earnings. Palantir, I can see volume kicking up for Palantir. Um, if you ask me, because I know it's going to come out, some of us are going to talk about it. Palantir is probably going to beat for earnings. But just understand, it's not always about the beat. It's not always about beating revenue and beating EPS, right? It's about what the CEO and the CFO talks about. Because remember, they have a conference after earnings. So pay attention to that. Like Meta, right? Meta had a crazy blowout earnings. It did wild in revenue and all that other stuff. It missed on EPS, right? Not by a lot, but the reason it missed on EPS, right, is the part that kind of is crazy. It had a one-time tax, right? A one-time tax of like 25 billion or something like that. And the market didn't like that. So you see Meta's on its way down to damn near 620 possibly if it continues to drop tomorrow. I think it's in like the 650s right now. But it dropped from 700 and something down to 640 something, right? Because of a one-time tax credit. Company itself is doing amazing, making big moves, revenue's great, all that stuff, right? But the market didn't like what they said in that one-time tax, which is why I say even if a company can beat earnings, it doesn't mean it's going to go up. So if you play earnings, like actually hold until the report comes out and expect to be up the next day, that's pure gambling. So I only talk about these for the sake of letting you know volume will be in Palantir and the moves will be a lot juicier to trade. Navitas, right? This is big. This is a stock that I'm still in, stock that some of us are in, and that was put out, right? Navitas is one of our long-term holds, right? Navitas is one of the keys to better chips and GPUs. All right. A lot of times it'll get that pop. Everybody will talk about it, then they'll forget about it. It'll come down some, and then it starts taking off when nobody's paying attention. If you know what the company is and what it does, you're not worried about the come down. You're not worried about the quietness. You're already positioned and ready to go. Okay, so understand that. Uber, that's one to watch for earnings. Okay, anywhere near that 100 level, that $100 level, right? I don't know if you look at the chart. Uber likes to gravitate to that $100 level. Anywhere near that $100 level now, right? As it's been up, you might catch it break above. That's like 102, 103s. Uh, Shopify is one to watch. They normally make humongous moves for earnings. Spotify as well. AMD is going to be one to watch, right? That's one we're all watching, one we've all traded, one that some of us are all in. SMCI is the stock I'll be watching, right? And this one I'm not watching so much for volume. Remember, I brought this up. SMCI is going to be one of those quiet contenders, right? This is going to be one of those plays because it involves cooling, and cooling is big when it comes to the data center GPU computer industry, right? So this could be one of those quiet stocks where it's doing its thing, it's sitting around 50s and 60s, cool, coming down to 49, but it's gonna come out with this major deal out of nowhere and start taking off on everybody when they're least expected. All right, Super Micro Computers is one of those stocks that is a huge pioneer in the cooling system industry, right? It's took a couple hits, but it's still slowly securing partnerships. So don't sleep on SMCI, especially when looking at levels. But as of right now, big names: Palantir, Uber, Shopify, Spotify, AMD. All right, volume. Robinhood. Robinhood is going to be a big one to watch for earnings, right? Ion Q is going to be one to watch. App Lovin, right? That's one to watch for sure. Qualcomm, ARM, those should see some volume. You'll definitely see volume come into ARM. Qualcomm as well, especially because Qualcomm basically made that announcement last week and took off. So this will honestly be a perfect time for earnings to come in and they actually start selling on you, and then they bring it back down. Just a thought though. It's like Quantum is basically this week's, I think Quantum's going to be this week's name to watch. So you got the D-Wave, QBTS, you got Ion Q. Um, what else we got? Datadog makes moves. Watch Iran, right? Watch New Scale. These aren't plays to watch like to play as far as like for earnings, but these are plays to watch for whether we're going to hold or get in them, right? IREN is a major play, right? In the sector that we're already paying attention to, right? That energy sector. So Iron is one of those that you want to know if it's doing good, right, financially, right? If they raise guidance higher and say, hey, next quarter or next year, quarter two is about to be our biggest quarter, whatever, whatever. You want to watch this company because that's possibly a company to hold into next year. All right, because Iron is definitely a big player into the energy game. New Scale is also in that area. Remember I told you Sound is going to be like SoFi. Sound is going to be another SoFi. Okay. Sound is going to be another SoFi. If you saw how SoFi moved and where SoFi went to from where it started, Sound is SoFi. The way SoFi was that pioneer in fintech, right? Sound is that pioneer in AI sound technology, right? It's in your cars, it's in your order screens at McDonald's, these drive-throughs, all of that stuff, right? It has these partnerships with a lot of these car companies and whatnot. So you can see Sound securing even more contracts. The more you start seeing these autonomous robots or autonomous driving vehicles, you can guarantee SoundHound's probably going to have something to do with that technology when it comes to voice control protocol. So do your research, but I can see Sound pulling a SoFi. But yeah, so those are the names I want you to watch to play throughout the week for volume plays, right, leading up to earnings. All right, couple charts that I like I want to bring up. I'll show you right now. Hold on. Like I said, right? Navitas. This one. Navitas can get above 1395. You could probably see that reversal game come into play, bouncing from this 20 EMA and trying to go back up for that 17. What is this? The high of 1779 range. All right. So accumulation right here is not bad. Accumulating right here, small accumulation, right? Small entry isn't bad at all in this area. This could be where the bounce starts. MACD histogram is starting to go yellow, right? Signs of trend slowing down and getting weaker and starting to reverse, right? Our RSI is starting to curl upward. It's not coming from the oversold, and we like to buy more in the oversold area because this could always drop down further. That's why I say if you want to accumulate here, that's fine. Just know your stop loss is probably going to be the $10 range. Give it out to that 50 below $10. All right, so your loss threshold is below $10 if you get in anywhere in this area. All right, $13 to $12 holding. You got to be able to take that L below 10. That being said, if we do get above that 1395 and you wanted to wait for maybe like a run up, that 1395 is your entry with your first price target being 1514, right? Above this 1514 candle, as you look, it's right here, right? Over all these other low candles. So that 1514 has nothing in the way until this candle. So from that 1514, right? If we get above that, we're looking at 1690 and making our way to new highs or higher highs, shall I say. But I'm pretty sure it's new highs. But yeah, like I say, Navitas is a long hold. It's not even one of those, oh yeah, day traded. You know, it's a long hold. This stock is definitely going to be $20+ in the future. But again, for the sake of, not holding it while it's coming down, you can day trade it. Look for those levels, right? Above 1395, write this down. We're looking for a high of 1514 is our next price target from there. If we catch momentum and movement and a run above that, we're looking for a high of 1690 and then making our way above to new highs. Another chart that I like is Lyft, right? Lyft made us a lot of money last time and it's going to make us a lot of money again. Why? Because we play gaps. We play gaps. Understand, right? It gapped up, therefore making a gap down here. What did it do? It filled that gap back down and now it's holding. It's holding. Okay. Not saying, right, that it won't come down some more, but I like it where it's at right now for this simple fact right here. One is on the up and up. Right? It's on the up and up. So we have a high, we have a low and a high. We have a higher low and a slightly higher high. Okay, slightly higher high. Then we have another higher low right here. We need this to bounce up and give us another higher high. That being said, right, if you want to start accumulating here, that is fine. Where is our stop loss? This first low right here. So below 1886, you can start getting a little shaky, a little scared if you're in anywhere around here. But Lyft is going to 27, right? 27 to $30. Lyft will be going to 27 to $30. It's all about when it gets there. What I want to see is a strong move into this gap right here. And we made this gap a long time ago. And this is how we made all that money off the first round of Lyft call plays, right? You see where it dropped hard to where there's nothing here in between. Stocks like to fill those gaps. So once we start catching momentum back up into this gap and beating this top candle right here, right? This high of 23.50, it'll probably start hitting that 25, 27, $30 range. Seeing as how these are levels that we're watching, right? I'm using these same levels as a starter entry point. So I'm accumulating some of my call options or shares in this area, right? Hoping to get in. What gives me, conviction or helps say, hey, you might be right is my MACDs, right? The histogram went from red to yellow and it's starting to curl up, hopefully into the green. RSI came down to the oversold level, it's working way back up. And what do? We crossed that signal line. The purple RSI crossed the white signal line. Make sure y'all can see that. Right, cross up on the RSI. Honestly, if I see another green cross right here happen, I'm going to get excited. I'm going to get excited. All right. But again, I'm not saying it's going to go up, right? It can come back down. But what I'm looking for is at least to come above this level right here because it's been ranging, right? Upward trend, but also kind of ranging, right? Below or between the 20s and basically the high 18s, right? Between high 20s and high 18s, buying in there. And once we break this $21 range, it'll probably start making its way back up into the gap for Lyft. Okay. This is one of those plays you got to play smart, be patient. You could look for a breakout, right? Above that $21 range to start trying to play it into the gap, right? Or you can accumulate down here with a decent level stop loss. Just understand though, it's going 25, 27, then $30. Another one I like, APLD. All right, APLD. So we were in APLD, I believe, in like $11 range, right? I think it was $11 range. Got to go back and look. APLD could possibly be giving us another shot before it goes to $40, $50 again, right? It hit that 40, it could go well above that. Understand what stock you're trading, right? APLD is a data center play, but it's not just a data center play. APLD is the NVIDIA of data centers, right? Because not only do you have all these other data centers, you have these data centers buying space, right? Buying space and making contracts with APLD, right? So APLD is basically building out the data centers, right? And providing the gigawattage, the energy for these data centers. For these other ones like CoreWeave, signed the deal twice with APLD to utilize its location for its data centers, right? So the APLD is a data center, it's also a data center builder. It'll build out the data center for these other data center companies. You see what I'm saying? Like it's basically about to monopolize the data center space. All these other so-called data centers are using APLD for their data centers. All right. Then you have these baby data centers, right? A lot of these Bitcoin miners have turned into data centers because they know there's not a lot of money in it now, especially since the last halving, lowering how much they get in return. And again, you can see more contracts starting to flood into APLD. APLD is already signed to build, like, I think, a third data center build out. Okay. Not only that, you have other companies like NVIDIA signing contracts with APLD to actually be provided with data center gigawattage. So the energy needed for what it's doing. Okay. So again, APLD basically, I know it's not as high as CoreWeave. I think CoreWeave is in the hundreds and stuff, but APLD is slowly becoming that leader in the space. So don't sleep on APLD, right? I'm not saying this is one of those day trade situations. I'm saying this is a stock you need to watch for the long term. Okay. Um, it came all the way down to $29 and went back as high as 37. As long as we stay above this 10 EMA, it's pretty safe to start a very small position. Overnight, it's up 29 cents, nothing crazy. But you see this level right here? You see this white line, right? This white line above that 37.17 range, right? It's currently at 34.95, basically $35. Above 37.20, you can see APOD go right back for that $40 price target. Okay? You can see go right back for that $40 price target and beyond. But yeah, if you get APOD dropping again for whatever reason, and if you could buy it low, get a little bit of that low. But day trade purposes above that $37 range, you can see it go right back to 40. All right. So above that $37 range, you're probably looking at $40 for APOD, 41, 42, and so on. Remember my rule. When you catch new highs, right? When you catch new highs and there's nothing to look at on the left side for previous levels, you're just going dollar for dollar. So if the high, the only high it's ever had is $40.20, and it gets above that, our next price target is 41.20. If it gets above that, our next price target is 42.20. All right, dollar for dollar when there is no data to the left. All right, but again, above 37.20, this thing could probably go for a run to $40 and then even higher. That's APOD. Hood, right? Hood has earnings this week. I was actually talking to somebody, right, another skilled trader, and came up with this little or shared this little thesis I had about Hood. Hood is in that group of stocks, right, that I call retail hype stocks. You have Palantir, you have Nvidia, you have AMD, you have Hood, and a couple other ones, right? Palantir has hit $200, Nvidia's hit $200, AMD's gone above $200, I believe, and Hood hasn't. Do you think that Hood is going to stay below $200 while all its other counterparts are above $200 or have hit $200? No. I can see Hood at least being a 180 to $200 stock. I can see it trying to make that run for $200 stock. So Hood in the long term, in the long run, right? Or in the future is probably going to be a $200 stock. Okay, so it's definitely one you should at least watch, or hopefully you've bought and held so far. I can see Hood earnings actually doing good too. I just can't tell you which way it'll go. I cannot tell you which way Hood will go, but I do see Hood doing good for earnings, and that's just my thoughts. Okay, I'm not always right, but I do see Hood doing good for earnings. But again, it's not always if it beats earnings. It's about what the CEO says, CFO says, and what data guidance they put out. All right, but Hood is another one to definitely have on your radars. Hood is basically dropped to 121 from 153. That's a big drop, and it gave you guys a huge chance to get in at a lower price from the top. Then it started running again. All right. So what I see here is this high and this low. This high didn't go higher, but this low didn't go lower. So that's tightening. It's what you call tightening, right? The trend is tightening, meaning whatever move it makes to the upside or downside, right? So if you wanted to draw your lines, this right trend tightening, bottom. You could see a big move probably happening, right? You could see a big move probably happening. The tighter it gets, the stronger the move. MACD, right? My MACD right here is above the white line. Just had a fresh cross, bouncing off that signal line for another try to go up. So RSI bouncing off the signal line, another try to go up, kind of gravitating towards, the overbought area. I can see Hood possibly running into earnings. All right, remember Hood, where is it at? Has earnings on Wednesday. So what that means is between Monday and Tuesday, people could probably buy into Hood hoping for good earnings. And you can see Hood basically going higher and higher throughout the week, unless the market comes down and economic data comes out negative and things happen. All right. So, but I can see Hood having some decent swing moves. But if I were to play Hood above that, let it load. There we go. 149.20 level, right? Above that 149.20 level right here. If it breaks back above that, I could probably see going for that 153 level again. All right, 149.20 will take us to 151, then 153 on Hood, and then possibly new highs. It's not too far, right? Not too far. And this is a reversal pattern right here. Downtrend, right? Hard stop. The previous candle gets above, or the next candle gets above the previous candle. That's bullish. Green candle above the red candle. If this candle takes out this last high right here before this next one, that's bullish completely, and we're going for 153. Okay, that's just the mechanics of how it works. When the green candle takes out previous red candles, that's showing us it's bullish and it wants to go higher. So basically, this last red candle is 147.72. All right. Top of this green candle is 149.20. We closed at 146.78. All right. So to be perfectly clear with you, above 147.72, which is our last red candle, all right, that's not a bad entry either to go for 149.20. All right. Above 147.72, so basically above 147.80, I might take an entry if there's enough volume and power behind that move and try to get to that 149.20 where you could either stay in it and raise your stop loss or trim some and take some profit at those levels, right? But above that 149.20, we're looking to go even higher and retest that 153.56 level. But yeah, so those are levels on Hood. There's always downside levels, right? There's always downside levels. So below 143.30, if Hood drops and we get red tomorrow and we get jiggy with it below 143.30, we're retesting this red candle right here and coming into it probably as low as 137. But I'm looking for Hood to possibly go higher. And those were the levels I gave you. All right, this next one I like is Netflix, right? I know it's expensive, but check this out. It's about to get real cheap real soon. If you have $1,200, right? If you have $1,200, $1,500 in your account, you funded it or whatever, and you buy into Netflix, right? Buy one share. That one share will become 10 shares, I think like November 10th or something like that. It'll become 10 shares. I gave you guys homework, I believe, last week to look at what happens, right, during stock splits on these huge, profitable, big companies. People get all excited. They want to buy in now, right? Get into that stock because they know it's going to split, starts to run up. Right, the stock runs up, it splits, and it can go even higher from there. All right. Sometimes though, the stock will also sell off, right? They want it to go down so that way when it splits, it's even cheaper. All right, even cheaper. But that first move will determine the next move. So if it's going up and running up, right, and it continues to run up, right, and then it splits, understand a lot of these companies are probably going to start taking their profits out while leaving some shares. So it can come right back down after that split before going up even higher. Okay. But the way Netflix is working, it took a huge dump from 12.49 all the way down to 10. What is this level? 10.87. All right. So what that tells me is all I'm looking for is a run into this gap of 11.58. Now, I know this sounds crazy, and here's why. If it splits before it gets there, the number is going to be totally different, but you got to look at that equivalent, okay? But if it gets up here before that split even happens, which it very well can, just know into this gap above 11.57, Netflix is going to try to go right back up to that $1,200 range. All right, because there was a lot of liquidity in this gap down. So that means if the buyers gain that much power, there's going to be liquidity, right? There's going to be strong money to take in the gap up. But like I said, that's if it gets there. But at the end of the day, if you buy one share of Netflix right now, you're going to get 10 when it splits. And all you got to do is let that shit sit. All right, Netflix, I know we did the boycott. Netflix is woke as hell and all this other stuff, right? But Netflix isn't going anywhere. It's not. They literally turned around and released a whole nother version of Netflix where you can watch movies early before they even get released on regular Netflix. So they're looking to innovate while we're looking to hate. And I understand it, but we're here to make money and nothing else. So understand Netflix is not going anywhere. And if you manage to just take a $1,200 investment, buy one share of Netflix, you will get 10, and you could just sit on those as it goes back up. All right, that's just smart investing. Not to mention the MACD is curling up, RSI is curling up, so Netflix might be going up some more. Now for my smaller accounts, I haven't forgot about you. I got a couple plays for you guys. Remember, I told you guys about LAES, right? CLSQ, Seals Q, right? This is a play to watch. Why? Because it's curling up, it's showing us signs of a reversal, okay? And then if I'm going to map it out for you, I'm going to map it out for you. Here you go. You see where it broke down and it tapped once, rejected, tapped it again, came back down, right? What do you think is about to happen? Once it breaks above these levels with some power, it's going to start taking off again. Now, let me give you some data on LAES. LAES is the security, right, to quantum computing. Quantum computing will be able to break down and unlock and get through any password in a matter of seconds. Quantum computing is the antichrist to Bitcoin. It could get through that whole Bitcoin equation and just topple the whole coin. Like quantum computing is the fastest brain you'll ever see. So you still need checks and balances, right? So where you have that wonderful world of quantum, you still need security. And that's what LAES is. I'm not saying there's not other security names in the space, but LAES is one of the names that's really picking up when it comes to quantum and showing a real use case in the future of quantum as a check and a balance. Not to mention, I like the chart. All right. So small accounts, LAES, keep your eyes on it. Right above this level we hit, right? Drop below it, hit it once, hit it twice, about to probably hit it again. Once we get above that level, though, finally of 766. We're going to make that run for let me see, for 871. All right, above 766, we're going to try to go for 871. So above 766, we'll probably run into a little battle at 775. Remember, it's a smaller stock. They don't move crazy like that. They make small moves. Above 776, you'll get that little battle at 775. And maybe we'll have some good news or something. That'll get us above the 871 level right here. All right. So small accounts, you start doing your research on LAES and seeing if it's good for your portfolios or not. Um, Grab, right? I've been advocating for this for myself and small accounts, right? MACD, we're below the zero line. That's where we like it when it comes to buying more. It's oversold and just now breaking above that signal line on the RSI. That's where we like it. Because once we show strength above this zero line on the MACD and we're moving, and this RSI gives us that room to the upside and gets in this overbought zone and gives us that rocket fuel, that's when you start seeing stocks take back off. Now understand Grab, right? Here's what Grab is. Uber, Lyft, DoorDash, Grubhub, and any other fast delivery service in the USA and Canada, wherever, is a all-in-one service in Grab in the, I believe, what is it, East Asia, South Asia, but over in Asia, Grab is all those things in one. All right. Not only is Grab all those services in one over in Asia, it's a profitable company. I need you to understand how big this is. You're getting a company at $6. It's $6 right now, and this is the solution to getting all of these Ubers and Grubhubs and stuff over there in the Asian side, right? This is that solution at $6 that's already a profitable company and it has cash on hand, right? Which means it has money, like free money, it has free cash on hand to spend on research, development, and other partnerships. Okay, so Grab for what it is, if you ask me, right? Because I'm not always 100%, but if you ask me, this is a steal of a company at this price for what it can be in the future based off of evaluations. Not only that, but Grab has earnings, I think tomorrow. I think it has earnings tomorrow. This week for sure, but let me see. Is it tomorrow? We'll see. I believe it's tomorrow though. I want to say Grab has earnings tomorrow, so we're about to find out. I can probably look at the chart. Earnings date Monday, 3 November. Yep, it's tomorrow. So for those of us who aren't familiar with TradingView, right? If you're on the main chart screen, you have a lot of these icons. This E stands for earnings. You click that, it tells you when the next earnings date is, and that is tomorrow. So we'll see. We could probably get above that 627, maybe higher if it does well enough and has good guidance. Remember, it's not always about beating, it's about what the CEO and the CFO talk about. So, but yeah, as of right now, we are in a short term, I believe a short term downtrend. Right, short term downtrend, boom, boom. So here's what we're looking for in this, right? Again, this one doesn't make crazy big moves because it's a smaller price stock. But we break out and get above this red candle, we're going to start making our way back up to the 630s and the 660s and hopefully higher. All right, it's simple, right? The tops and the bottoms. Which way is it going? Down, downtrend, right? Ideally, you're cautious because when it hits this resistance point, it wants to come back down to the support level of this downtrend, which is, right, the lower trend coming down here. But if we just so happen to catch a breakout, right, above this upper trend line right here, and even more so get higher than this red candle, this previous red candle, you're looking at a strong bullish move to the upside on Grab. But again, this is for all of us, not just the small accounts. Grab is one of those sleeper companies that really, I think you're getting a steal of a deal. Okay. We already talked about sound, so I'm not going to bring that up, right? Another one for all of us, but definitely, the smaller accounts. Again, I told you guys Trump talking about trying to test out nuclear power and then the energy sector moving towards nuclear power, right? And us trying to stay with homegrown energy sources, homegrown mineral sources, right? Even through the China deal, we know better than to just rely fully on China. So don't fall for the BS. We're still looking to build contracts here at home. So I know MP took a dump off of that, but that might be an opportunity to buy more. But again, right? This could be your accumulation zone. We just have to see how it plays out, right? Boom. This being the lowest level, right? But anywhere in here might not be a bad buy. Okay. But once we get back above this level right here of 23.41, you're probably looking to fill the rest of this candle to $26 and higher. All right. But right? The four U's, don't sleep on it. Even if it comes down some more, don't sleep on it. All right. Energy is the name of the game right now. It is the name of the game right now. So all we're gonna be doing is waiting on contracts, waiting on news and things like that. But when you find solid energy companies that are getting contracts with the government, right? Energy sources that are going to be supplying these energy companies, right? Keep, keep your eyes on the prize. All right, you don't got to buy them right now. I'm not saying just go buy everything, right? But start looking into them, research, learn how to read the financials, right? Learn how to search for possible contracts, right? You can honestly go to the government pages and see who they're looking at to possibly do contracts with, or who they have, in the running, or who they're already doing contracts with. All right. And understand in this Trump administration, right? I'm only here to make money, not to talk politics. That being said, he tends to stick with those who stick with his donors. So if somebody in the backside has put money in his pockets, let's say like Palantir, right? Palantir, one of his biggest donors, sits at the tables at all these meetings. Palantir is going to see a lot of that money come its way, a lot of those contracts come its way, a lot of these deals with other companies. If there's companies tied to Palantir, those ones you need to be watching to be next up. All right. Now, Trump put out, right, companies like Energy Fuels, the Minerals Corp, and things like that. When they start talking about those companies, even if they come down the road, that's not the end of it. That's not the end of the company, right? This is the initial, you gotta understand, these are the initial conversations. Like, hey, yeah, we signed a deal with the Minerals Corp. Cool, they signed a deal with them. Now what you're looking for is what that deal does, right? That now you're about to see you're looking for the fruits of that labor, or once they make the deal, you're looking for them to actually start work, actually start production and things like that. That's your next catalyst for the stock to move up. Don't get scared of down moves. A lot of times it's big pockets trying to get that stock lower so they can get in cheaper because they know it's going to go right back up off of that next catalyst of production has now started, right? Or the metals company contracted with the government has now provided 500 billion megatons of minerals to this so and so company. That'll be the next catalyst. Don't get scared of the come downs when you know those companies have solid positionings. But yeah, keep your eyes on you. Okay. I like this zone right here. Of course, stop loss, right? 1776 and below is basically is going to come down. But this is one of those day trade stocks. I'm just saying, watch it. And anywhere in here isn't a bad buy, at least a small starter buy for it to possibly try to break back up this level again. And again, watch Quantum. All right, watch Quantum. Definitely watch Quantum stocks. I don't know if you guys can screenshot, but this right here is my watch list that I watch every morning. All right. So this is the quantum list right here. These are the quantum stocks. You can screenshot, snap, whatever. These are tech stocks, all my tech stocks. Big tech companies right here that I watch, tech security, tech chips, semiconductors, all of that. All right. My energy and innovation companies slash data centers right here. These are streaming subscription services and things like that. Shop, SoFi, Disney, Robinhood, Netflix, Snap, all of those. Lyft, Uber, Grab. This is retail, right? You got your Kohl's, your BJ's, Costco's, FedEx, all of that. Ulta, UPS, Walmart. Defense stocks, right? As much as I hate war, as much as I hate battles, as much as I hate any type of death, right? Unfortunately, that's one of the biggest ways these companies make money. So if you hear us striking any companies, if you hear Israel strikes on Gaza, like just for a week straight, they're going to run out of missiles, right? We're going to send them more missiles. We're going to fund this shit that they're doing. How are we going to do that? We're going to send them missiles from Raytheon and Lockheed and Martin. You see what I'm saying? Once war starts and they know missiles will be depleted, guess who's going to build more? Lockheed Martin RTX. Guess who's going to sell those? Lockheed and Martin, RTX, right? So anytime you hear shit about wars, conflicts, and it's about to be kind of maybe a long one or a big one, you'll see these defense stocks start to pop up, even Honeywell and things like that. Even Boeing, right? These jets, these bombers, things like that. Boeing. We start getting overextended in our conflicts and battles. We need more aircrafts in multiple places. Boeing, it's time for you to pump out more production, sell us more of those aircrafts you have on the line. They make money that way. Then, of course, we can't forget about crypto. Another thing you want to watch, right? If crypto, right, on Sunday, if crypto is heavy green, right, heavy green, like it's running out of nowhere, that Monday is probably going to be green for the stock market. All right. So Bitcoin above like 113 is a good indicator the stock market might be green. And that's pretty much all you need to look at. But yeah, that's all I got. That is today's Sunday live. Hopefully, you got everything you needed, you got the tools, things like that. Now, this is the time. If you have any questions, by all means, you can ask them. As far as questions go, going once, going twice, sold. All right, remember, I'm going to post this in the chat, right? I'm not at my computer, so Zinxis, I need you to go ahead and do that same thing and post this in the chat as soon as you can. And so you guys can come back and look at it and use it for reference. And I'll catch you guys tomorrow morning, bright and early, to make some money on this market. Appreciate your time.
We suspect Netflix to